welcome to my channel. Today we are going to talk about why 99% of traders lose money in the market. This is a topic that's near and dear to my heart because I've seen so many people struggle to make money in the market despite their best efforts. The truth is, trading is a tough business. It's not enough to just have a good strategy or a bit of luck. To be successful in the market, you need to have a deep understanding of the complexities of the market and the discipline to stick to your plan no matter what. So in this video, we are going to break down the reasons why traders fail in the market. We are going to look at common mistakes that traders make and give you some tips and tricks for avoiding those pitfalls. Whether you are a seasoned trader or just getting started, there's something in this video for you. So sit back, relax, and let's get started. First things first, let's address the elephant in the room. Most traders lose money because trading is hard. There is no sugarcoating it, folks. If it was easy, everyone would be making money hand over fist. But the truth is, the markets are complex and unpredictable, and making consistent profits requires a lot of skill, knowledge, and discipline. So, if you are struggling to make money trading, don't beat yourself up too much. You're not alone. That being said, there are some specific reasons why so many traders fail. One of the biggest reasons is that they don't have a solid trading plan. A trading plan is like a roadmap that tells you what trades to take, when to take them, and how much risk to take on each trade. Without a plan, you are just shooting in the dark, and that's a surefire way to lose money. Another reason why traders fail is that they don't have a good understanding of the markets. They might know a little bit about technical analysis or fundamental analysis, but they don't really understand how the markets work as a whole. They don't know how different factors like interest rates, geopolitical events, and economic data can impact prices, and that can lead to some costly mistakes. Speaking of mistakes, another reason why traders fail is that they don't manage their risk properly. Risk management is absolutely crucial in trading. You need to know how much you're willing to risk on each trade, and you need to have a plan in place for when things go wrong. If you're not managing your risk properly, you can quickly blow up your account. Another common mistake that traders make is that they try to predict the future. They think that if they can just figure out where the market is going to go next, they'll be able to make a fortune. But the truth is, no one can predict the future with 100% accuracy. The best you can do is make educated guesses based on the information you have available. Another mistake that traders make is that they don't have a good understanding of themselves. Trading can be an emotional roller coaster, and if you don't have the right mindset, it can be really tough to stay disciplined and stick to your plan. You need to know your strengths and weaknesses as a trader, and you need to be able to control your emotions when things get tough. Another reason why traders fail is that they don't have a good support system. Trading can be a lonely business, and if you don't have anyone to talk to about your trades or to bounce ideas off of, it can be really tough. That's why it's so important to find a community of traders who you can connect with and learn from. Another common mistake that traders make is that they don't have realistic expectations. They think that they're going to be able to turn a small account into $1 million overnight, and when that doesn't happen, they get discouraged and give up. The truth is, trading is a long-term game, and you need to have realistic expectations about what you can achieve. Another reason why traders fail is that they don't have a good understanding of position sizing. Position sizing is all about how much of your account you're risking on each trade. If you're risking too much, you can quickly blow up your account, but if you're not risking enough, you're not going to make much money even if your trades are successful. It's important to find the right balance, and that's something that a lot of traders struggle with. Another mistake that traders make is that they don't have a good understanding of leverage. Leverage is a powerful tool that can amplify your gains, but it can also amplify your losses. If you're not careful, leverage can quickly wipe out your account. That's why it's so important to use leverage responsibly and to understand the risks involved. Another reason why traders fail is that they don't have a good understanding of market psychology. The markets are driven by human emotions like fear and greed, and if you don't understand how those emotions can impact prices, you are going to have a tough time making money. It's important to be aware of market sentiment and to be able to adjust your trading strategy accordingly. Another mistake that traders make is that they don't have a good understanding of trading costs. Trading costs can eat into your profits, and if you're not aware of them, you could be losing more money than you realize. It's important to understand things like spreads, commissions, and slippage, and to factor those costs into your trading plan. Another reason why traders fail is that they don't have a good understanding of the importance of discipline. Trading requires a lot of discipline, and if you're not able to stay disciplined, you are going to make a lot of mistakes. You need to be able to stick to your plan, even when things get tough, and you need to be able to control your emotions. Another mistake that traders make is that they don't have a good understanding of trading psychology. Trading can be a very stressful and emotional business, and if you're not able to deal with those emotions, you are going to struggle. You need to be able to stay calm and focused, even when things are going wrong, and you need to be able to bounce back from losses. Another reason why traders fail is that they don't have a good understanding of the importance of education. Trading is a complex and ever-changing business, and if you're not continually learning and growing, you are going to fall behind. You need to be reading books, watching videos, attending webinars, and doing whatever you can to stay on top of your game. Another mistake that traders make is that they don't have a good understanding of their own biases. We all have biases that can impact our trading decisions, whether we realize it or not. It's important to be aware of those biases and to be able to put them aside when making trading decisions. Another reason why traders fail is that they don't have a good understanding of the importance of backtesting. Backtesting is the process of testing your trading strategy using historical data, and it's a crucial step in determining whether your strategy is likely to be successful in the future. If you're not backtesting your strategies, you are flying blind. Another mistake that traders make is that they don't have a good understanding of the importance of patience. Trading can be a slow and frustrating business, and if you're not patient, you are going to make a lot of mistakes. You need to be able to wait for the right opportunities to present themselves, and you need to be able to stay patient even when things aren't going your way. Another reason why traders fail is that they don't have a good understanding of the importance of risk-reward. Risk-reward is all about balancing the amount of risk you are taking on with the potential rewards. If you're not getting a good risk-reward ratio on your trades, you're not going to make much money in the long run. Another mistake that traders make is that they don't have a good understanding of the importance of diversification. Diversification is all about spreading your risk across different markets, instruments, and time frames. If you are putting all your eggs in one basket, you are taking on a lot of unnecessary risk. It's important to have a well-diversified portfolio that can weather any market conditions. In conclusion, there are many reasons why traders fail in the market. From lack of discipline and education to poor risk management and trading psychology, there are a lot of pitfalls that can trip up even the most experienced traders. However, by being aware of these common mistakes and taking steps to avoid them, you can improve your chances of success in the market. Thank you for watching this video. If you found this information helpful, please like, share, and subscribe to my channel for more content like this. And if you have any questions or comments, please leave them down below. Until next time, happy trading.